I want you to picture just sitting at your desk and opening up a financial spreadsheet.
Right, just a normal Tuesday.
Exactly. You're expecting to see, the usual incremental numbers that keep the corporate world turning, like maybe a solid 3% growth here or a tiny fractions of efficiency gain over there.
The standard stuff.
Yeah, the standard stuff. But instead, the number staring back at you is 252% year-over-year revenue growth,
Oh, wow.
right? That is the kind of number that makes you just, like, rub your eyes and check if a decimal point somehow magically migrated 2 spots to the right.
It really does sound like a typo.
It does. And welcome to today's deep dive. We've actually got our hands on a single, incredibly dense financial excerpt today, and is detailing the absolute blowout earnings of a company called SanDisk Trading under the ticker SNDK and, well, the broader memory sector in general.
Yeah, it's a fascinating document.
But our mission today isn't just to, read a spreadsheet out loud to you. I mean, anyone can do that. Our mission is to figure out the actual mechanics behind these massive numbers. We want to know what the phrase pricing in actually means when millions of dollars are on the line, and how savvy investors seemingly knew these astronomical figures were coming long before the official announcement even hit the wire. So, okay, let's unpack this.
It's a staggering set of numbers to look at. And honestly, it's completely natural to just fixate on the sheer scale of that top-line revenue because it's so huge.
Right, it's blinding.
Exactly. But as we kind of peel back the layers of the specific excerpt, the much deeper story here is really about the flow of information in the tech hardware market.
Like how the data actually moves.
Yeah, exactly. It's an exploration of how the market digests reality before that reality is ever officially documented in a press release.
Okay, I love that. But to understand the story behind the math, we probably do need to establish exactly what that math is.
Oh, absolutely.
Because the author of our source document provides this really strict, almost clinical analysis of the Q3 earnings data for SanDisk. And the metrics just completely shatter every single estimate on the board.
They really do.
Let's just look at the top line first. Revenue.
Yeah.
So SanDisk brought in $5.95 billion for the third quarter.
Which is massive.
Massive. Especially when you consider that the expectation from analysts, and these are the people whose entire livelihood depends on modeling these outcomes, their expectation was only around $4.7 billion.
Right.
So that right there is your massive 252% year-over-year growth, which the source notes represents a 26% beat on the estimates. And it trickles down perfectly to the bottom line, too.
It does.
Yeah, earnings per share, or EPS, came in at $23.41 versus the expected $14.50.
Which is, that's a 62% beat.
That's insane.
It really is. In the context of mature, publicly traded companies, like a 2 or 3% beat is generally considered a solid, highly successful quarter. So a 62% beat on earnings per share, that fundamentally breaks the forecasting models.
Because EPS is essentially the pure profit.
Exactly. It's the pure profit allocated to each outstanding share of the company. So a jump of this magnitude means that not only did SanDisk bring in, vastly more raw cash than anyone modeled, but their fundamental ability to turn that revenue into pure profit practically exploded overnight.
And that explosion in profitability brings us to the third metric our source highlights. And to be honest, this is the one that I think is the most mind-bending.
Oh, the gross margin.
Yes, the gross margin. SanDisk's gross margin reached an incredible 78.4% versus the 67.3% estimate.
Yeah, that's huge.
Our source notes this is a jump of positive 1,110 basis points over the expectation. Now, I know financial jargon can get thick, so let's try to put a 78.4% gross margin into the context of an everyday business for you listening right now.
Good idea.
Imagine you run a little shop, and you sell a physical product for exactly $100. A 78.4% gross margin means the physical materials required to make that product. So the raw silicon, the plastic, the packaging, all of that only cost you about $21.
Leaving you with a huge chunk of change.
Right. The remaining $78 and change is your gross profit before you even pay your administrative overhead. For a physical hardware company making highly complex memory chips, keeping nearly 79 cents on the dollar after manufacturing costs is almost difficult to comprehend.
What's fascinating here is the sheer physics of that 1,110 basis point jump.
The physics of it, what do you mean?
Well, let's break down why that is so structurally significant. A basis point is simply 1/100th of a percentage point. So 1,110 basis points means their margin was 11.1 percentage points higher than expected.
Right, which sounds big, but how big is it really?
Well, if we were talking about a software company, sure, you know. The cost of replicating a line of code or a digital download is essentially zero. But we are talking about semiconductors here. Memory chips require massive fabrication plants, or fabs, which cost literally billions of dollars just to build.
Oh, wow. Billions just to start.
Exactly. They require incredibly complex global supply chains, extreme clean room environments, and highly specialized physical materials.
Right, so you don't just, like, accidentally stumble into an 11% efficiency gain on a physical assembly line like that.
Exactly, you don't. For a hardware manufacturer to blow past efficiency estimates by over 11 full percentage points, something structural in their pricing power or their cost structure has to have shifted dramatically. Fabs have massive fixed costs, specifically capital expenditures or
Like
CapEx.
the actual machines.
Yes. You have to buy $100 million lithography machines, regardless of how many chips you actually end up selling. So when a company like SanDisk suddenly operates at a 78.4% margin, it means they're selling their memory chips at a massive premium, while their fixed manufacturing costs remain relatively flat.
So they essentially have maximum pricing power. I mean, they brought in record cash, but more importantly, their manufacturing costs didn't just eat it all up,
Exactly.
which naturally kind of shifts our gaze to the future.
Yeah.
I mean, if Q3 was this historically good, you have to wonder if it was a fluke or if this is just the new baseline. And our source dives right into the Q4 projections, which are honestly just as aggressive.
Oh, the momentum absolutely does not stop. The projections indicate a sheer acceleration of what we just saw.
Right. So the Q4 revenue projections are set between $7.75 billion and $8.25 billion.
And remember, the expectation was lower.
Much lower. The expectation was only around $6.5 billion. So they're projecting revenue to be 23% above the already lofty estimates. And for the Q4 earnings per share, they're projecting $30 to $33 per share versus an expected $23.
That is a 37% beat on future EPS projections alone.
It's wild. And our source summarizes these projections in a way that honestly just made me laugh out loud when I read it.
Yeah, I know the line you're talking about.
The author notes that this Q4 guidance is formal confirmation that memory companies are, quote, going brrr and marching upward this year.
It is always highly entertaining when rigorous financial analysis intersects with like internet meme culture.
It really is. And for anyone not chronically online, going brrr is internet slang. It originates from this meme of a money printing machine just crank it out cash like brrr.
Right.
So the source is essentially saying SanDisk has officially turned on the money printer. But here's what I really need to unpack. Let's look at the mechanics of the market reaction for a second. If I'm an investor, right, and I read this press release, and I see the company is officially projecting to blow Q4 estimates out of the water by 37%, why wouldn't the stock market just explode the very second this document drops? I mean, if a company formally confirms the money printer is on, shouldn't the stock price instantly shoot to the moon that exact same day?
That is such a good question. It raises an important point, and it really gets to the absolute core of how modern financial markets operate.
Because it feels like a total disconnect.
It does feel that way. It is very intuitive for us to think of the stock market as a reaction machine. You know, a headline drops that says good news, so the stock goes up. A headline drops that says bad news, the stock goes down.
Exactly. That's how we're sort of taught it works.
But that is a fundamental misunderstanding of the market's architecture. The stock market is not a reaction mechanism. It is a forward-looking discounting mechanism. Wait, a discounting mechanism? So you're saying the market isn't actually reacting to SanDisk's present reality at all. It's essentially taking a bet on the future. And once the future actually arrives in the form of an earnings report, the bet is already settled.
Precisely. The market's entire function is to predict the future cash flows of a business and assign a current present-day value to that future.
Oh, I see.
Yeah. By the time SanDisk publicly publishes a document saying, hey, we made $5.95 billion in Q3, the institutional money in the market has already spent the last 90 days figuring that out.
They didn't just wait around for the CEO's press release.
Not at all. They tracked global supply chains, they analyzed shipping data, they looked at commodity pricing, and they bought the stock weeks or months ago based on those highly educated models.
Wow.
So when the actual press release comes out and the news is officially good, the stock might not surge at all because everyone who wanted to buy based on that reality already did so a month ago.
So the surprise is just entirely gone. The event has already been priced into the stock?
Exactly. The formal announcement is just a lagging indicator. It's just validating what the market had already mathematically suspected and acted upon. And honestly, this brings us to the specific, fascinating thesis of our source author regarding the memory sector as a whole.
Right, because our source, and I guess it's worth noting here that the author fully discloses they currently own SanDisk stock, makes a very specific argument about why this sector behaves the way it does.
They do.
They argue that memory companies are actually easier to price in ahead of time compared to other tech stocks. They specifically contrast a memory company like SanDisk, SNDK, with a social media company like Reddit, trading under RDT.
Right, the contrast is stark.
And here's where it gets really interesting. The author points out that a platform like Reddit is priced off of human traffic data, but memory companies, their pricing relies on third-party physical indicators, specifically things like NAND price hike reports.
That distinction is the entire ballgame, really. Yeah, it is the fundamental difference between trying to predict human psychology and tracking the physical constraints of a commodity.
Let me see if I can put an analogy to this, just to make sure we're grasping the difference between tracking these two types of companies.
Go for it.
Let's say predicting the earnings of a memory company via NAND price hikes is kind of like a farmer predicting their harvest costs. If you're a farmer, you don't wait until December to find out if you're going to turn a profit.
Right.
You check the wholesale prices of fertilizer in, like April. You look at tractor fuel costs. If fertilizer prices are rock bottom and the futures market for wheat is historically high, you know your profit margins are going to be incredible long before you actually harvest a single stalk of wheat.
That's a great way to look at it.
That's SanDisk. But predicting Reddit's earnings, that feels more like a retail store owner standing by the front window trying to count foot traffic every single day to guess their sales.
Yeah.
You don't know for sure if people are going to walk in, click an ad, and buy something until they actually do it.
Right. And if we take your farmer analogy a step further, the fertilizer isn't just cheap. There is an actual public index publishing reports showing everyone in the industry exactly how cheap it is every single day.
Oh, wow.
That is what the market is looking at. In the tech hardware world, NAND is a fundamental type of flash memory. It's the storage inside your smartphone, your laptop, the massive servers running cloud computing. It is a true commodity.
So it's basically the raw material of the digital age.
Exactly. And just like fertilizer or oil or lumber, the wholesale price of NAND fluctuates based on global supply and demand.
So how does the tracking actually work in practice for these investors?
Well, there are independent research firms, brokerages, and spot markets whose sole function is to track the wholesale price of NAND memory on a day-to-day basis. The spot market is basically where excess memory is bought and sold globally.
Okay, so it's happening in real time.
Right. So if you are an analyst covering SanDisk, you don't need to wait for SanDisk to release their quarterly numbers. You just subscribe to a third-party report tracking the NAND spot market. Because of the physical limitations of semiconductor manufacturing, and remember, we mentioned earlier, it takes about 90 to 120 days just to process a silicon wafer through a fab, the supply side is highly predictable.
Because you can't just speed up physics.
Exactly. You can't just magically spin up a million new memory chips overnight. So if demand spikes, the spot price of NAND immediately hikes up.
And because the supply is physically constrained by the realities of manufacturing, that price hike is pretty much locked in.
Yes. If those third-party reports show that NAND prices are hiking up by 15%, and you know SanDisk manufactures and sells NAND, well, you do the math.
Right.
You know their gross margins are going to expand because the commodity they're already producing is increasing in value on the open market.
So you essentially have the answer key to the test before you even walk into the classroom.
You do. This is why predicting Reddit is so difficult in comparison. Reddit relies on daily active users, or DAUs.
Which is just human behavior.
Exactly, and human attention is frictionless. A user can log into Reddit 50 times one week and 0 times the next because they found a new app. There is no physical constraint on human attention.
But physical silicon wafers take 3 months to bake.
Bingo. So, as our source points out, the repricing of SanDisk, the stock actually going up, happens the moment those third-party NAND price hike reports are published. By the time earnings day arrives and SanDisk drops a press release showing a 252% revenue growth, the market isn't shocked. The earnings report is literally just a historical receipt at that point.
But hold on, let me push back on this a bit, because this idea of pricing in sounds almost too perfect. Doesn't this entire mechanism assume that these analysts have perfect information?
That's a fair point.
Like, what if the third-party NAND reports are flawed?
Mm.
Or, even more practically, what if SanDisk has a massive internal supply chain failure? What if there's a fire at a fab or just terrible management decisions that these NAND price hikes don't account for? Doesn't the market ever just get it wrong?
That is a critical pushback, and you're absolutely right to separate the theoretical model from the messy reality. The market is not omniscient, and pricing in is not a flawless crystal ball by any means.
So it's more of a best guess.
It is a probability engine. You are highlighting the difference between systemic sector risk and idiosyncratic company risk.
Meaning the difference between the whole industry having a problem versus just SanDisk dropping the ball.
Exactly. The NAND price reports tell you about the macroeconomic weather. It tells you it's going to rain money on the memory sector. But you are right. If SanDisk's management forgets to put buckets out to catch the rain, they will still miss their earnings.
Right, they can still mess it up.
They can. However, institutional investors are playing the probabilities. If the spot market is screaming that NAND is up 20%, the highest probability outcome is that a major manufacturer like SanDisk is going to capture a large portion of that windfall.
So the market bets on the most likely outcome.
The market prices in that highest probability. When they occasionally get it wrong, say SanDisk reveals a massive, unexpected manufacturing defect on earnings day, that is when you see the stock violently crash, because reality violently deviated from the priced-in probability.
I see. It's a calculated bet based on the best available physical evidence.
Exactly.
And what's wild is that the author's final point in the source is simply that, given these astronomical earnings, memory players will likely keep marching upward over the rest of the year. But based on our breakdown, we know that assertion isn't just blind optimism from someone holding the stock.
No, not at all.
It's an assertion anchored by the fact that those third-party NAND prices in the real world are likely still holding strong right now. Going back to our analogy, the farmer sees the fertilizer still cheap, so the next harvest is predictably going to be just as lucrative.
If we connect this to the bigger picture, the forward projections of 37% EPS beats in Q4 aren't pulled out of thin air to appease shareholders.
Right.
They are mathematically tethered to the current verifiable reality of the memory supply chain happening right at this exact moment.
So what does this all mean for you listening right now? We started this deep dive looking at a set of numbers that honestly seems like a typo. A 252% jump in revenue. A gross margin that casually leaps by over 11 percentage points, basically defying the normal gravity of physical manufacturing constraints.
It's quite a journey from those raw numbers.
It really is. We went from being totally shocked by those surface-level headlines to realizing that for anyone actually paying attention to the right clues in the supply chain, none of this was a surprise at all. It was mathematically predictable months in advance.
That's the real takeaway.
Yeah, the real takeaway here isn't just about how SanDisk makes a lot of money fabricating memory chips. It's about a complete paradigm shift in how we consume information in our own lives. It is incredibly easy to sit back and wait for the official announcement, the flashy press release or the morning headline that tells you what just happened.
It's what most people do.
But as we've unpacked today, by the time the headline is written, the opportunity to truly capitalize on that information has already evaporated.
And that is the most vital lesson we can extract from this deep dive. Knowledge is only truly valuable when it is understood mechanically. We operate in an environment of absolute information overload.
Oh, constantly.
We are constantly bombarded by earnings reports, breaking news alerts, and endless streams of data points. In this context, critical thinking means questioning the source of the value.
Digging deeper.
Right. The real edge, whether you are managing a financial portfolio, running a small business, or just trying to navigate your career, doesn't come from being the fastest person to read the official summary. It comes from understanding the underlying mechanics. It comes from knowing which seemingly obscure third-party metrics actually dictate the official numbers. You have to train yourself to spot the gears turning before the output is packaged into a neat press release.
It's about finding the gears that turn the machine, rather than just staring at the clock face waiting for the hour to strike.
Yeah.
Which leads me to a final thought I want to leave you with today. We spent this entire time dissecting memory chips, SanDisk, and how physical NAND prices act as the secret probability engine for that specific sector.
And it's a fascinating sector.
But this concept applies to absolutely every industry on Earth. So here's my question for you to mull over after you finish this deep dive. If NAND prices are the secret crystal ball for memory companies, what is the hidden third-party price hike report for the industry you work in?
That's a great question.
What is the leading indicator, the unglamorous underlying data point that everyone else in your field is completely ignoring until earnings day forces them to finally pay attention. Find that metric, and you might just find your own money printer. Thank you so much for joining us on this deep dive. We have loved unpacking this with you, and we'll catch you next time.